Well, as you're planning for retirement, there are a lot of products, tools, and strategies to use. Two of them we commonly hear about are stocks and bonds. But which investment will be the most rewarding in the long run? That's the key. Here to break it all down this morning, Damon Roberts, Matt Deaton of Acute Wealth Advisors, two of the Valley's leading financial advisors, and host of their very own radio show. That's every week, right now on KFYI and KTAR, right, guys?
Yep, we're double dipping.
Double dipping.
Starting May, will just be on KTAR at noon on Saturday.
Excellent, but right now you're on both, so that's a good thing. All right, Damon, I want to start with you. I want you to break it down for us. I want to start with stocks. What are the pros and cons of actually owning them as part of the overall retirement plan, looking towards the future? Well,
let's, for the average investor out there, a lot of times people don't know what a stock is. So let's define that. A stock is owning a piece of a company, and the advantages to them is you can own a piece of a small company, large company, or mid cap. You can diversify across different industries, and there's unlimited potential for growth in them. But with that unlimited potential comes the unlimited downside risk. For example, if you'd bought Amazon at the beginning of this year, you'd be up 21% in 4 months. But if you'd bought ExxonMobil, you'd be net down 9.45%. So there's volatility, and you just have to understand how much to own within a retirement plan.
Well, and that's actually where you guys come in, because a lot of people don't know that, and nor do they follow it. Is that something you do as our advisor, is keep us abreast of whether it's going up or down and whether we should move out of it?
Absolutely. We are big about educating our clients as to how much risk versus safety they should have, so that they're never in a position where they're dying because the market's not performing the way that they want it to.
All right. So what about bonds, Matt? Let's talk about that. Pros and cons, and is it a good investment for us long term?
Yeah, so bonds are basically the company is borrowing money from you. You basically loaned it to Ford or GM or something so they could build a factory. Probably the biggest misunderstanding about bonds is that people believe that they're 100% safe. But there are bond funds. In fact, this past couple years, bonds have actually struggled. They've actually had losses in a lot of segments because they're related to interest rates. If interest rates are rising, bonds will usually go down in value because you're buying it you have a bond that's paying a lower interest rate, where you'd rather have the newer bond that's paying a higher interest rate.
Right. Is it all based on interest rates, though?
For the most part. Okay. It's also based on the quality of the company. So you just have to be very careful. Again, people just think, oh, I'm in bonds, so I'm safe, and I can ignore it. But you have to be paying attention to that part of your segment as well, because it can have losses as well. Right,
and then there becomes the balance that we all have to play, the dance that we have to play. And how do you help us balance the two and keep it moving forward for us, especially as we get older and life changes?
Well, since we focus on retirement, preservation in retirement is the #1 goal, with growth as a close second. So for viewers at home, if you want an easy way to gauge how you're doing, you can take 100 and subtract your age, and that'll give you the maximum amount of risk you should have in your portfolio.
Okay, that's a good formula to follow. Real quick, Matt, then, diversifying. We all hear that word. How do you help us make other choices, and can you, and do you recommend that?
So I think that's one of the things that helps us stand out against other advisors, is it's not just about stocks and bonds.
Right.
There are multiple other type of investments that you can do to get more diversified. Stuff that doesn't go up and down just based on what the market's doing. We talked about it a couple weeks ago about a bond that actually goes up and down based on weather. So there's ways that you can diversify so you can get the performance that you're needing.
That was my favorite one, by the way. Well, we'll have to revisit that one. All right, you need more information, maybe you're nearing or at retirement. Acute Wealth Advisors, they have a special offer for you. They're offering a complimentary portfolio review. They'll take a look at what you have, but they only have 8 slots available this week. So you can call now, find out if you qualify for that free slot, 480-620-6907. You can also visit their website, acutewealthadvisors.com.